All right, let's get right into it. The entire financial world is buzzing about something that's, well, poised to change pretty much everything we know about owning things, about investing, about value itself. We're talking about asset tokenization. And look, this isn't just some niche trend. It's a multi-trillion-dollar revolution that's already happening.
So, let me ask you a question. Imagine you could own a tiny slice of a luxury car, or a piece of a world-famous painting, maybe even a share of a massive skyscraper, all without having to be a millionaire. That right there, that's the core promise of tokenization, making things that were once exclusive accessible to pretty much everyone.
And this is not some far-off futuristic idea. No, we are talking about a fundamental shift that is happening right now. The financial projections, honestly, they're staggering. The biggest institutions in the world are placing huge bets on this technology.
And just look at the scale of this thing. I mean, these numbers are wild. You've got Hashdex seeing a $400 billion market in just a couple of years. Then you look out to 2030, and McKinsey is calling for $2 trillion. But then you have firms like ARK Invest forecasting, get this, $11 trillion. Now, that huge range tells you one thing: we are still super early. But while the exact number is up for debate, the direction of travel, oh, it's crystal clear. It's heading straight up.
Okay, so what is this trillion-dollar idea really? Like, what are we actually talking about here? Let's break down the core concept. It's simpler than it sounds. At its absolute heart, tokenization is just the process of taking a real-world asset, like a building, a government bond, a bar of gold, and creating a digital proof of ownership for it that lives on a blockchain. And these little digital proofs, we call them tokens. A really great way to think about it is this idea of a digital twin. Right? Just like an email is the digital version of a paper letter, a token is the digital version of a stock certificate or a property deed. It carries all the same rights and all the same value. It's just in a much, much more efficient digital format.
And this quote just perfectly illustrates the magic of it. Think about it. If you have a whole apple pie, it's kind of hard to share or sell off little bits of it. But the second you slice it up, now you can easily hand out pieces. You've essentially tokenized the pie. This is fractionalization, and for assets that used to be impossible to divide, well, it's a total game changer. So, what kind of stuff are we talking about tokenizing? Honestly, the potential is huge. We're talking about everything from tangible things like real estate and gold, to purely financial things like stocks, bonds, even shares in private companies before they go public. Basically, if it has value, you can probably tokenize it.
Okay, so that's the what and the why. But how do you actually do it? How do you take a physical building or a piece of paper and turn it into a digital token on a blockchain? Let's walk through the actual mechanics, step by step.
It really boils down to 3 key steps that connect the physical world to the digital one. First up, an institution has to value the asset and then create a special legal company, often called an SPV, whose only job is to own that one asset. It's like putting it in a secure legal box. Second, the actual physical thing, or its legal deed, is handed over to a trusted, regulated custodian for safekeeping. This is absolutely critical. It's what backs the token with something real. And finally, a smart contract, which is basically just code that automatically follows rules, mints or creates the digital tokens that represent ownership of that asset held in custody.
So, now we know how it works. But what's the big deal? What's the real-world impact of all this? This creates a completely new financial playing field. So let's look at the incredible upsides, and just as important, the risks you need to know about. I mean, this chart right here really puts the whole revolution into perspective. In the old world, you're stuck trading from 9 to 5, it takes days for your trades to actually settle, and you usually need a lot of money to even get in the game. Tokenization just blows all of that up. Markets can run 24/7. Settlement happens in seconds, and because you can own tiny fractions, you can invest with just a few dollars. It's faster, cheaper, and way more accessible. Okay, but let's not get ahead of ourselves. This is not some perfect, magical system. Not yet, anyway. Like with any powerful new tech, there are some pretty significant hurdles and risks that we absolutely have to talk about. It's so important to have a balanced view.
So here's what you've got to watch out for. First, regulation is still a giant question mark. The rules are being written as we go. Second, those smart contracts are just code, and code can have bugs which hackers can exploit. Third, just because something is tokenized doesn't mean there'll be buyers for it. You could get stuck with a token that's hard to sell. And finally, you're placing a huge amount of trust in the platform that created the token and the custodian holding the real asset.
So, when you weigh all that potential against the risks, where is this all going? What's the next chapter for tokenization? Let's take a look at what's on the horizon.
The biggest sign that this is going mainstream is right here. The absolute giants of traditional finance are all in. BlackRock, the biggest asset manager on the planet, has a tokenized fund. JPMorgan and Citi are building their own token systems. Even the New York Stock Exchange and NASDAQ are looking at how to get this done. This isn't some fringe experiment anymore. This is the big leagues.
So what this all points to is this great convergence. These two worlds that used to be totally separate, traditional finance, or TradFi, and decentralized finance, DeFi, they're starting to merge. We're watching the creation of a brand new hybrid financial system that wants to take the best parts of both.
Now, to really unlock the full power of this new system, there are two major hurdles we have to get over. First, we desperately need clear and consistent regulations all over the world. And second, we need interoperability, basically a way for all these tokens to move easily between different blockchains, creating one giant connected market.
And all of this leaves us with the big trillion-dollar question, right? Is tokenization just a fancy new plumbing system for trading the same old stuff a little more efficiently? Or are we actually watching the first steps of the complete rebuilding of our entire global financial system from scratch? Honestly, only time is going to tell. But one thing is for sure, the shift has already begun.